Hello, Market Chameleons. It feels like a Monday, but it's actually Thursday because we were off yesterday for personal reasons. Good to see you, Dima.
Good morning, Will. How are you?
Excellent. I'm going to start the webinar. So I know we're going to go over some new features on Market Chameleon.
Yep.
But if anyone has any questions, we want to be able to ask them live, correct?
Yeah. So if you guys have any questions, you could use the live chat on the YouTube. If you want to come over and ask your question live, you could. You're putting in the link there.
I already popped the link into the chat. Yes.
Right. You could click on that link that will take you over to the Zoom. When you're on Zoom, you could click on a button to raise your hand. When you raise your hand, we'll activate it so we could hear your voice. You don't need to turn on your video camera, but we'll be able to hear your voice. And then you could ask the question. Everybody else will hear the question. Maybe you guide us to a specific page you're looking on, and then we could just discuss it that way. But at least then you could, if there are any follow-up questions or surrounding circumstances, we'll be able to, communicate and hear it directly from you. Before we do that.
Yep, there you go.
Yeah, let's just get the disclaimer out of the way. So everyone, keep in mind, Will and I and Market Chameleon, we're not registered investment advisors. We're not broker dealers, and we're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's a disclaimer.
All right. Awesome job.
I'm going to share my screen. So I think initially we'll just start out as usual. We'll take a look at the pre-market report just to see what's going on in the pre-market hours. Then I'm going to move on to start discussing some of the new features that we've released, I think, over the weekend. I started on them earlier this week, but we'll just continue. Okay. So this is the pre-market report. These are stocks trading in the pre-market hours. We have the most active list, biggest percentage gainers, biggest percentage decliners. I'm going to scroll down here really quickly, and I see that 45 stocks made our percentage gainers list, 59 on the percentage decliners list. So kind of a mixed bag, maybe a little bit weaker bias at the open. Let's take a look at the higher market cap stocks, see if we see a similar situation. So I'm going to do market cap of 20 billion or higher. So here we see 7 stocks made the percentage gainers list, 21 on the percentage decliners list. So again, slightly bearish at the open, but not overwhelmingly. These are by far not very big lists, so consider them pretty small. So probably kind of mixed to a little bit, more bearish at the open. One stock I don't see, I know I was reading earlier today on the Wall Street Journal, they were mentioning that Taiwan Semiconductor, and I think they're the biggest producer of semiconductor chips, are going to start raising the prices of their chips, and that's going to impact potentially lots of electronic products, including, I think their chips are in cars and mobile phones, the iPhone. And, we've been hearing about these shortages for a long time, and now they're going to start, now we might be beginning to see a trend now, and the prices are going to start increasing. It's not only chip, yesterday we're talking about inflation. Just to mention one more thing, went yesterday just to get some takeout, and I wanted to see if I could get like some salmon, and the sign up there said we had to raise the prices on salmon because of COVID. And like, I don't know if you've seen like some produce, but this was like triple the ordinary price. So at least for me, and I'm hearing this from people, I don't know how you are, Will, but slowly increasing, they're starting to filter more and more in through the economy. And now we got this 3.5 trillion stimulus package coming up. So I think we're going to be in for, some inflation, bigger inflation than people are trying to even expect right now.
Doesn't seem like the prices of anything are going down. I mean,
nothing. Yeah.
Everywhere you look is everything's super expensive, and the prices are rising. It's incredible.
Yeah. And it's happening in historically where we've seen deflationary, right? Like in technologies, we've seen offsetting deflationary pressures. So you always have inflation, we're always printing more money and stuff, but as efficiencies in technology improve, those kind of offset some of that. But now we're seeing the opposite, even in the technology sector. I think we're going to start seeing, computers, chips, automobiles, it's going to start impacting it down the line. That's at least right now kind of the indication. But let's just stop there with that topic so I could get on to the new features.
We did have one question about the pre-market.
Okay.
Java seems like a new user is asking about. They're asking, is there a strategy that works using those gainers and decliners lists? I don't know about a strategy that works, but we do have a feature that shows what has happened the previous time they've either gained or lost in that feature, right? Don't we have something that shows how they've responded in the past?
Yeah, exactly. So there, there's no one strategy. There's no like one indicator that just like this works across the board, and there's nothing such like that. What we're doing here is first you're filtering out what's moving, because now you're getting an indication of what's going on in the pre-market hours. Are you seeing something unusual in a sector, in a stock? Is it reacting to earnings? Is it reacting to news? Is it just up or down on volume? So you got to figure all that out, because there are a lot of moving parts here, right? So here, ULTA, that's up 5.9%. But if I move over here, that little E is telling me it's reacting to an earnings event, right? So we'll know once a stock reports earnings, they're going to react potentially to whatever that earnings announcement is, or whatever the management is saying, what the numbers are. And here, basically, you can go read about, you'd want to then read about what they're saying about their earnings. And you could take a look at their history, like how did the stock historically react? We see it's up 5.9% here. So we could go to its history and see like, well, how does that compare to history? So we see, 55% of time historically was down, 45% up, so kind of mixed. We see that the average move up or down, the magnitude of the move was 8.7%. So here, we're right now a little bit below the average. And this is how historically the stock behaved after, how much, after the opening. What was the average move to the high of the day, the average move to the downside, the average drift from the open to the close, and how did the stock tend to do after? Again, you're taking on, it's pointing one thing out, then you want to go down there and start researching all the other variables, right? You could go down here, read about the earnings themselves, see what they're saying, if there's something different. So you could do it in, there are lots of data to look at. I'm not going to go through all of it right now just to get to the new features. But the point is there one strategy? There's never one strategy that fits all, right? You're trying to assess the data and trying to figure out, where's the best way to position yourself if you're interested in this trade, trying to evaluate your risk and reward and seeing if the probability of taking on that risk is good enough. So hopefully that helps, kind of answer. And some people, they play the contrarian, right? So some people, when they see big moves, they'll say, well, is this overdone, to the downside or to the upside? I think it'll come in. So there are different ways that people like to use these movements in a pre-market. If there are no follow-up questions on that, Will, I'm just going to move on.
Yep. Why don't we get to the new features?
Yeah. Again, if I don't, you can come over and ask the question if I don't answer completely, because obviously when Will reads me some of it, I'm just assuming, I'm making a lot of assumptions in my answers, what you're asking. So let's go under options. I'm going to start again on the unusual option volume report, because we did make some changes here. So this report existed before, A lot of people use it to find trade ideas, see what's going on in the options that's unusual. And basically it filters out stocks. This is yesterday's report. We're not opened yet for trading today. So we're looking at yesterday's report. And these were stocks that had unusual option volume yesterday. And the way we filter out unusual option, we compare what the average typical volume is on a day for this particular stock. And then we look at the option volume today. And if, for example, here, 57,894 contracts traded, typically trades 158 contracts per day. So for this stock, this is unusual, right? Because if we compare the volume to what it typically, that would make it unusual. It's 366 times more than what it trades on a day. And again, this is just trying to first point out to you that something might be going on. Then it's up to you to kind of go in there and start doing your research and looking at the surrounding circumstances. We talked about the data elements in this table earlier this week. The new feature that we added here was the number of days that the stock appeared on the unusual option volume report, in the last 12 days, including the most recent, not including the most recent. So we see here, for example, SPRT. So I'm going to open this up just to make another point here. So let's just take a look at this SPRT. And we see that here, we kind of highlighted the days, that there's unusual option volume, okay? So these are the highlighted ones, yesterday. And here, what you get to do is take a look at how the stock progressed, how the options progressed, how the open interest progressed, right? So we see where the stock kind of started on August 5th. We see that, it's been increasing, up to here. A lot of stock volume traded this day, a lot of option volume over here, August 13th, backed off a little bit and continued to rise. And one of the, just looking at this, okay, just looking here, the point I wanted to make is that sometimes, people's expectation, they have to be fast, right? As soon as they see something, they have to be fast. And that's not the case. Really, it's not speed of buying something or selling something. It's really the assessment of the information, right? It's if you can't take a break and assess it and really form a thesis, speed is never going to help you. And just to give you from my own experiences, some of the best trades I've ever made, the biggest, best trades started out as losers because there's volatility. There's no, I didn't have the expectation that I'm going to pick exactly the spot where I buy it. And from that spot I buy, something is going to go infinitely up and it's never going to go below that spot. That's an unrealistic expectation. And when people are doing that, you're not helping yourself, because if that's your expectation and that's what you think you're going to, then you're never going to achieve that. Like, just to give you an example, Warren Buffett, some of his best trades, you could go back and look from the spot. I think he bought Apple Computer, and from the spot he got in, it was down maybe even for 3 months, 4 months, 10% or so, but then it eventually came up. So, why I'm saying this here is just take a look how this progressed. Here's the unusual option volume, right? So it went up, it went up, it went up here, came back down, went up, but really, it took a while for this to actually really progress. It wasn't so you have time to kind of assess this situation and see, well, what's behind this move? And I see here, that even the open interest, here's the open interest, kind of started climbing, dropped here, interestingly, then started coming back up. I think August 20. When was the expiration? Will, was it here? Maybe it was here. August 20th. So maybe that's expected to drop because that month options expired. They're off the board. it's climbing up here, but here it looks to me like we're almost back up to the high in the open interest in the calls and in the puts. And I just kind of want to strike that point. Like, it's when people think it's speed, and that's it, they get in trouble, right? It's your ability to assess the information. It's your ability to kind of form the thesis, and over time, it's your experience. So experience trumps everything. Experience is much better than if you have the fastest. You could have the fastest machine. You could have a super feed from New York Stock Exchange, whatever they charge $100,000 a month. You could have that. You could be the fastest, but without experience and not knowing what to do, it won't matter, right? So it's again, your experience, which takes some time, your knowledge and your ability to over time start assessing, the information and positioning yourself the right way. So let's just take another example here. Here's let's see this one, 4 days. So ZY, right? We see here's when it started to kind of appear on the unusual option volume. And you could see here what happened was, first, it was going down. Nothing actually even came out. It came back up around here. But again, jumping in on anything here, I don't see, there wouldn't be anything there to jump on, right? So you see it, then you kind of want to form the thesis, what's behind that trade. What are the headlines going forward that are just going to make it go higher? What are the headlines? You almost have to anticipate the headline, right? Or to make it go lower, right? That's what you're trying to determine here. So having said that, I wanted to really quickly go back over that, and we've already, discussed these features. I'm going to go to the 10-day look back period. Okay. And let me know, Will, if you start having questions coming up.
Sure.
So the 10-day look back period is it's taking 10 days of unusual option volume reports. So all these reports here, all right, you got all these reports here. It's looking at the last 10 days. And it has a list down here, of the stocks, how many times they appeared. And you could kind of just filter them, by an individual stock, like BTCM. I see 11 times, so I could just take BTCM, and from here, let me do it, just kind of see how that stock progressed, and what the options did that day. I see lots of calls trading. I see where the implied volatility has decreased. So this gives me really quick picture of what's been going on in that stock, right? Now, another way you could use this report is say, well, if I filtered it by groups, what tended to happen to the stock the next day, following the unusual option, following the day it appeared on the unusual option volume report, or where is it current? So if we took all the stocks on this list, here we see that the next day, any stock that appeared on the unusual option volume report, 51% of those the next day were higher, right? So from the close to the next day's close, they were higher, 48% lower, 1% unchanged, but on average, it lost 0.1%. If you waited longer than the next day, right, and just said, well, where is it currently, right? So this is looking at the current price. So obviously some of them, might be from 10 days ago, some of them from 3 days ago. But if we just look at the current price, extended the time period, we see 62% are higher, 37% lower, 1% flat, on average again 2.3%. So what it did is just showing us that it took a longer period, right? You could wait. It took a longer period for some of these stocks to actually climb. So what if we narrowed down this list and we could start making assumptions? Well, what if we just looked at stocks on this unusual option volume report that had the volume in the calls was 70% of the volume were in the call options. That means 30% or less were in the puts, 70% or more of the volume was in the calls. So let's take a look at that. And if I click on that, so we see here that in this case, it didn't change that much, but I think it actually declined a little bit. So if we just use that filter, it looks like on average, it did a little bit worse, right? Now we got the next day about 48% of them were higher, 51% were lower, and currently the 60% are higher, 39% lower for an average gain of 2.1%. So you could see there, if I unfilter that, so this is a little bit worse. The frequency of win is a little bit worse, but I think this was, let me see. Yeah, and this is a little bit worse. So that didn't actually improve in the last 10 days. That wouldn't have improved your results if you just concentrated on heavy call volume, right? So let's see, what if we just concentrated on heavy put volume, right? See that. So 70% of them were puts. So when the volume, look at that, when the volume, it's almost like contrary, right, indicator, when the volume in the puts exceeded the volume in the calls, more than 70% of the volume were in the puts and less than 30% were in the calls. The next day, 55% of those stocks were higher for an average gain of 0.4%. And currently, as you waited, right, so it's not about next day, but in a longer period, 68% of them were higher for an average gain of 3.4%. So that's what this stock is telling us. So you see here, GTS, for example, well, this one's August 24th, 86%, it had unusual option volume. 86% of the volume was in the puts. You could see that the average volume was way above. The volume was way above the average volume. We see here that from the previous, that day, it was up 45%. Again, the next day, a little bit more. And right now, it's a little bit more. Okay. So that's kind of like the idea. It's tracking the stock moving forward, right? Same thing, GDS. We see that on this day, August 24th, they're ordered by date, August 24th, 92 unusual option volume, 92% of the volume was in the puts. The next day, the stock was up 5.9%. And currently, from that date, it's up another 1%. Okay, so that's what it's doing. It's tracking the stock following that unusual option volume event. Is that making sense to people, hopefully?
Yeah, that's great.
Okay, so let's see if we hold on to that, if we could improve. What if we said that the put volume was high and the IV was down? So there, the next day, I think it did see an improvement for the next day. Or the current, maybe not as well. Let me just uncheck this. So we could see here for next day performance, right? If we looked at unusual option volume with mostly puts and the implied volatility is lower, right? The next day, the stocks tended to 61% of the time move higher, 39% lower for an average gain of about 0.5%. Currently, 67% were higher, and they, on average, extended their gains. So you see that some of those winners took longer than a day, right, to actually pop back up. And on average, those gains, it took longer than a day to extend or continue on those gains. And there might be other factors in there that you want to take a look at. The market was going up, so that could be also a factor. But we see here that unfiltered, this is doing better filtered than unfiltered. Okay. Let me just see. So 3.4%, IV down 2.7%. Let me see if IV was up. So here, that's interesting. So if we just filtered for a lot of put volume, over 70%, and the IV was higher. So the next day, 51% were lower, 47%. 51% were higher, 47% lower for an average gain of 0.3%. But as you waited, it took a little bit of time. You see that 71% of those stocks ended up being higher for an average gain of 4.1%. So you see here that as you extend the period, right? It's not about getting in instantly. It's as you extend the period, kind of assess the information, take a look, then it's improving over time, right? Is it making sense? Like, I think the point I was trying to make, it's not about speed, it's about taking information, assessing it, and kind of being able to position yourself the best way possible.
Hey, Dave, we did have a question from Michael that I missed earlier. He asked how you get to this page. Now he's asking, what report is this?
Okay, so you have to go to the unusual option volume report. So this was always on there. So, you come to the unusual option volume report, and you have two tabs up top. One is the unusual option volume. That's the default. If you click on this tab, 10-day look back period, that's the next, the next one. Right. So this is how you get there. And again, these are the things that let me see what else. We might have added a filter. Somebody asked to see how many times it appeared in the last 12 days on the report. So you can do, like, let's say if you do above 5, then this way it only filters stocks that have made the unusual option volume report at least 5 times or more in the last 12 days, right? So now you're looking at something that's been going on. Now, some of them might have earnings, and that might be normal, right? If you have earnings, you might be on that unusual option volume report heading into earnings and even heading out. So that's why we have these dates here as a reference. So, August 13th, this is when they reported. So you kind of have it as a reference. If it's, if it's coming up, it'll be lit up green. If it's in the future, it'll be yellow, right? Also,
Rob has a couple questions. He was asking, is there a way to get the average call put volume on just one stock that may not have the 10-day, not within the 10 days?
Wait, the average
put call volume, like where I guess where you're showing the put and the calls, like within a stock, how do you see it?
Well, this is the average volume of the calls and the puts. So this is the average volume of all the options, right? So you're comparing the average volume to today's volume. And this gives you a breakdown of the percentage of the calls versus the percentage of the puts inside this volume. So that is, I'm not sure.
I guess Rob, if you want to come over and ask the question, I'm trying to, interpret the typed in question. He was also saying, I guess you were showing one popped up that says very counterintuitive that the put volume is over 70% and the stock rises when the IV goes up. Made him.
So what was it that
there was a stock I guess you were on, and it showed that the put volume was over 70%, and the stock actually had risen when the IV goes up. He was just
exactly. So that's why we use the data, right? And unfortunately, a lot of people use assumptions and not data, and when you use assumptions, what you end up doing is kind of sometimes learning the hard way because you're forward testing with your own money. And then you get very frustrated because you're getting results that you think you shouldn't be getting, and then you get mad and you're like, well, this doesn't work. But this is why we start using the data to see, well, what happens? Like here's a stock, right? TVIT, 95% of the put, 95% of the volume on that day was in the puts. The implied volatility was up 23% to 151. So we do see that the next day, the stock declined a little bit, 1.2%, right? So it went from, $14.19. Next day declined a little bit, but look where it is today. So yes, you're looking at the averages, right? We're looking at the average. Obviously, it doesn't happen every time, but we're looking at what usually, and what it's telling us that sometimes, what's going on is that the stock could be down. A lot of people are buying puts and buying protection at the point of capitulation, right? So remember, somebody's selling those puts and somebody's selling that vol as well, right? And what's happening is potentially that it's reaching the point of capitulation, right? And that at some point it could be overdone, right? You're overshooting potentially to the downside. It's too pessimistic, So again, you want to take a look at the data and kind of understand it and see what's going on. And from that experience, you're going to start seeing similar situations, right? But it's the experience itself is going to trump everything. If it's not going to be speed, it's not going to be an indicator or some kind of trick. It's going to be your experience and sometimes from experience you have to pay to get it, right? You have to learn, and there's a cost to learning.
But by pay, you mean that the trade is potentially a loser.
Yeah, the trade will potentially be a loser, but you're going to have winners and losers. You're not going to be 100%. There's no such anybody who's trying to get into this thinking they're 100%, and you just go. Then you're just being unrealistic anyway.
Yeah, as the mayor says, he'll take 55% any day of the week.
Exactly right. Exactly. It's like a basketball player trying to shoot 100%. Every time he shoots, it's 100% success. It's not possible because you're dealing with the market. It's uncertainty. But that's so that's the takeaway from today. You have the data there to help you out. Kind of to maybe either confirm your thesis or maybe
start a thesis, right? You could start a thesis,
right? Get some experience, see what's going on, dig deeper into the data, form your thesis, and from experience, I think that's when you start getting better and better. And it's not about speed, I think a lot of people think they have to be fast, but look, fast at what? Like, what are you going to be fast at? Execution, fast at reading the data feed. But even if somebody gave you a super feed today and gave you the fastest execution, you're not going to know what to do because you're not prepared. So, and anything that's speed, right? Anything that you could, if you have logic that says step 1, 2, 3, that's fast and easy. That could be programmed in, right? And if it could be programmed in, there's really then that opportunity is almost fully exploited, right? So what's not programmed in is when you have to use your logic, experience, and human interaction, right? It has to require some human thought and interaction. But
all right. Well, the freight train went by 3 minutes ago. We're 3 minutes into the opening. We did have an anonymous attendee drop a question into the Zoom webinar. Just thought I'd read it. Maybe we can look at it tomorrow. He says, just trying to understand the technology in the back end. What is the technology stack? How did you think about creating the design? I've never seen anything like this before. You guys are nailing it. So that just came in, person dropped it in and then left the Zoom. But we do get a lot of new chameleons asking questions. We try to get to all of them. But that was dropped into the Zoom and I just picked up on it. Sorry I didn't get to that earlier. Well, maybe we'll look at that tomorrow. D, great job. Thanks so much.
Thank you, everybody, for joining. Stay safe out there. Have a good trading day and hope to see you guys tomorrow.